Okay, good afternoon. I am filling in for Mr. Razzie here. He's still feeling a little under the weather. So hopefully give him a little prayer and hopefully get bounced back on our feet so he can start kicking butt with his setup, get the computer all set up again and be ready to roll next week. But this is a quick recap here on Friday, the December 27th. Kind of a little ugly day here, but let's do a quick some quick disclaimers here. We get going. I will apologize right off the bat because Mr. Razzie, I think, is normally a little bit more organized and in terms of, oh, let me get rid of that, get rid of that. Just, I'm going to do a little bit more ad hoc here, right from the cuff, and just a couple things I want to talk about. One, just walking through some of the market, and what I want to do is actually just go to the charts and look at some of what is truly going on in our marketplace here with some of these sectors. I'm going to start right at the top. No particular order here in terms of how these are laid out, but just walking through, I'm going to move this in a little bit just to give us some idea. Let's do like a 1 year and show us how some of these sectors are doing. So I have a couple different things on the left here. I have the RSI, which is just giving you a measure of where we are in its current 14-day range. And then I have a range of where we are in the year on the year. So you can see that in the XLU, your utility ETF, this is doing all right, still up about 70% on the year, which is pretty phenomenal if you ask me. And we've had a pretty significant sell-off, so going from 83 back down to about 75. Just putting this in context, a little bit oversold here. Could we get a little bounce given, kind of what interest rates are doing? Of course, just scrolling our way down here. Again, you're at only a 59.6 on that. Again, down here, maybe not as extremely oversold, but clearly a big sell-off over the past 2 weeks here, trying to recover a little bit, trying to get back over its 200-day. This is your consumer staples. I think what you're going to want to watch in terms of the bigger picture is, can we get these things off of the bottoms, right? In terms of, we've already made lower highs here, and now we're looking like we want to roll over. You're still up 60% on the year. You've made 60% of this ETF on the year. From where we're at here at 79, we were back down on the year starting at, is that right? 72, right? In terms of where we are in the, no, that's not correct. That's not the right number I'm quoting here. So I guess we're saying we're about 59% of the range of the year. So that's all that really measures. So this is saying of the range, we're in kind of middle of the range now in terms of that. We're not making 59% on the year. I apologize. I misstated that. So if we come back and keep going here, XLV clearly on the lower end of the range, still positive, but on the lower end of the range. So this has gotten absolutely beaten down in terms of healthcare. We know this has been a kind of a target once there was really kind of, I think, the idea that Trump was going to come in and potentially who he was looking for healthcare, czar, whatever you want to call it. They basically have been getting beaten down there. So definitely a space that I think is going to continue to have some pain, along with your pharmaceuticals. Probably going to be pain points in here for those. So that's only about 46, and on the RSI over the past 14 days, you can see we're still down here near the oversold. So hopefully we can get a hold that 200-day in terms of the bigger picture. The energy, again, everyone talks about new administration coming in and pump, pump, pump. That's all going to be great, but when you think about the business and you think about what oil's been doing, hovering around 70, if you come over here real quick to crude, let's do / crude. Crude's been in this kind of downtrend and it's been just lingering down here. And we closed 70.25 on crude here on Friday. So not bad, right? Not great. Not really where the companies need it. Clearly, we've heard the number between 70 and 80 is kind of the sweet spot. Ideally closer to 80. So we'll have to see if that can hold. But XLE is getting beaten down really in the big picture here, trying to recover here a little bit. We've been watching this in the Phoenix portfolio. So, this has gotten to a point where you start to say, okay, well, if I can sell here and I buy here, I'm having a pretty good day. It's not a massive move, right? But it was an ugly looking sell-off, and we're looking to start to see if we should be taking some profits off the table here. We have taken some off, but again, we want to take a little bit more. XLY, we are up near the highs of the year in terms of the range. Again, I misstated that. I just thrown this in here, not something I use on a normal basis. But looking at where we are, this has just been in a phenomenal run in terms of, what's making this up. Now, the nice thing about analyzing and looking at this for these ETFs is you can see what's in here. And it's no doubt that there's a reason that these are up. When you look at this, Amazon, Tesla, Home Depot, some of the names in here have just been absolutely on fire. Amazon being one of them, Tesla being number two, really, really helps this thing in terms of making this thing a pretty strong product. So looking at that one could be one where you find cheaper options, but still looking pretty good. But if we start to take out lows back here, 225, I would definitely be on guard with that. I'm going to create an alert right now just to show you how easy that is. Last at or below, you just put your note in if you want. It'll notify you. And again, you're set and ready. If that starts to take out the lows, this thing can really start to give some back. But that also means Amazon and Tesla giving some back as well. Now, home builders have absolutely gotten beaten down. I'm not really a buyer quite yet. I'd probably want to see it get back above the range, this little kind of tiny range here, for me to see if I can recover, maybe get back up to the 200-day. But this definitely looks like a little worse for wear, especially today, rolling back over and not feeling great. But even though you're still, deeply oversold here in terms of your last 2 weeks, 14 days of look back period. XLF has been looking okay. We actually looked at this as a trade in one of our services for next week, given that financials have recovered pretty strong, but could go either way here, right? Given how they start to take what's going on in interest rates. And we did see a first wrong one. Let me just do it this way. Go over here, TNX, and I think I can do it with this one. And this is your yields on the 10-year. So had a great run in here, and again, given where we have already been post cut from Fed Chair Powell, this is kind of still hovering up in here. So that's a pretty strong sign that the market thinks that these rates could potentially be going higher, given even what Powell said, and that took the market down. So we're definitely going to be keeping an eye on that. Semis, trying to get a little bounce in here. Let me zoom in a little bit. I know this one's very, very busy, but we have not gone anywhere, right? We've been in this thing sideways, back and forth, back and forth. So this is one, maybe by the end of the year, next week, Monday, Tuesday, we get some markups on some of these things. Maybe we can get back up through these highs if they're looking really strong. So that will be definitely something I'm looking at. They managed to hold the 50-day today after a really ugly looking sell-off, got down to 245 and rallied all the way back to 248.40 to close. The XME, the metals and mining, basically been absolutely shelled, right? This thing has been destroyed. You can see how oversold this is. I'd be looking for some type of a bounce if it takes out the highs back in here. Your XLK, still relatively strong. Again, this is your technology ETF. And again, we can come back over here and look what makes that up. Apple, Nvidia, Microsoft, AVGO. Is there any wonder that all these stocks in here? But look at your top three making up, what's that, 28, for a little over 40%. You add in an AVGO, gets you up to 45%, a little over 46%, whatever that is. And you're doing pretty strong there in terms of those four names and how well they've moved over the past couple of weeks. So no doubt this is still near probably the strongest of all these ETFs in terms of their range. So still hovering up here. And again, if you were to start to take out lows, maybe you want to draw a bigger trend in here. If you feel like this is starting to break because it's sitting here sideways, maybe we're going to start to see a little bit more carnage in the new year. Think about what we're going into as well. And I think that's, again, we got a brand new year starting next Thursday, right? That'll be the second. And then we have basically a week of probably rallying where, again, you got new money coming in, depending on how that new money, the rebalancing of the market, people taking profits off the table in the new year, and a little bit of this rebalancing. So we do have a little bit of a nervousness, and I'll get back to this in a second, but a little bit of nervousness in terms of the market. We'll have to see. And again, this could be a space where, or an ETF that you want to take advantage of. implied volatilities on this is probably relatively cheap and could be a good place to use as a hedge. Your XLI industrials been really beaten down, right? They've been kind of similar to what's going on. The home builders really not doing much here. Again, I'd probably look at either side of this range and saying if we start to break back out, we're going to try to run these. If they break down, then this has got a lot of room to fall, come back down, major support down here around 120. Gold, I'm going to skip over that. XLB, the materials been beaten down, same thing as the industrials. Real estate beaten down. Again, you can see how oversold these things are. So, you start to get some new money coming in rotation, excuse me, rotation into some of these beaten down sectors. Look at all the ones that are deeply oversold in your RSI. Communication still relatively strong, not as strong as our XLK, but still relatively strong and looking pretty good here. So again, I would be looking at where we closed here for next week, probably trying to break out if they try to start to mark stuff up. Probably getting a little bit of breakout on this thing. This could be, you're right in the middle of the range in the RSI. So this is really setting up for a potential good 1-2 punch on Monday and Tuesday. So let me close this down here real quick. I want to come back to the broader market, quickly discuss the SPY. Let me see if I can take some of these off for you. There we go. It's looking a little bit better. And I'm just going to delete this guy over here, remove that drawing. So the one thing I do want to just highlight here is the breadth of the market. And I'm just going to do a load of study set. And this is basically pulling up the amount of stocks over their 50-day. Right now, we are hovering down at a pretty ugly level, 26, 27%. Got really, really ugly last week when we had Powell talk about kind of his stance, not taking Bitcoin, and basically that they may be done with rate cuts here for the short term, and maybe only 2 cuts for next year, and then combine that with the increasing of their target for inflation. So the markets did not like that at all. So we're still hovering in here. Not a great day today. Last day for taking profits or taking losses. So I think we started to see some people take some sales in here today, push the market down. Not that big of a deal. They managed to recover, get back above the 50-day, setting us up for maybe a nice little push towards the end of year markup by institutions trying to get their marks. That's how they get paid, right? Is trying to get those things. But I think what we're going to watch here is the bigger picture amount of stocks that are moving and how they're moving. If they continue to deteriorate here, only 25% of the stocks in the S&P 500 are above their 50-day. That says something. You look back in time, you go back, let's say 3 years, when we are really, really beaten down, we are basically starting to, again, start to get down this level. These are lows on this are around the 10% mark. You can see back in here, this was about a 20% mark. So when we are really, really getting beaten down in terms of the market, we tend to have this where the amount of stocks are dropping down below their 50-day. So this area here is in a very beaten down market. Now, we're not really giving way. We started to see the sell-off. It's kind of sticking with trend, still doing okay at the moment. Now, we start to see in the new year, we start to see new selling come in, maybe in front of some of the big weighted earnings, right? Earnings will start the second and third week of January in a much bigger pace. And then by the end of the month, going into February, we're going to start to see all those big weighted names, your Amazons, your Apples, your Microsofts, your Metas, Netflix. I'm not sure exactly when NVIDIA is, if it's in that 2 weeks or not, but they're all right in that couple of weeks there where they're going to start to come out and, give us some really good insight. Should we be continuing to stay with the market, or should we start? So if they start to fall away, and I'll show them in a second, in terms of those big weighted names, then that's going to be problematic because they've been carrying the market. And you can tell that the breadth continues to get worse and the market's not really falling apart like we've seen in the past. Last time we got down here on this area, we had basically rolled off pretty aggressively, right? You can see how far we came back down and touched the 100-day and then started to bounce. We're nowhere near the 100-day at the moment, and we're still kind of down at that same area. So again, keep that in mind. Now, I'll show you real quick the other couple, which is the 100-day. And again, we've taken out this entire area in here where we've been beaten down right in here. This one was really bad, and we're already below that. So this is the amount of stocks down below the 100-day. Again, comparison, last times we've really gotten at the bottoms, we were down here. We were only at about what, 15%. We're hovering right now at about 43%. So if this continues to get worse, definitely should be looking to protect yourself going into the new year, where we can get some carnage in terms of, again, first month tends to be pretty volatile. So here's another one on the 200 day. This is the amount of stocks above the 200 day. And we've clearly broken this range, right? So this has been your entire year right in here, been pretty consistently holding. We've had this big sell-off right in here. And you can see that the amount of stocks over 200 definitely faltered there. And we're getting pretty ugly here comparatively to where we were and how deep that was versus this one. So when we really get oversold in here, well, clearly back in this area, we were at what, 11, 12% in terms of that. And you can see that was at the bottom of the market. So if we continue to see weakness here, and it's really going to depend on the speed at which it gets there. So if we start to see just absolute carnage, then we could see some really significant ugly selling in terms of the broader market. Now, if we can get this to rally a little bit, that would be ideal. Now, the other one I want to show you in terms of breadth is the big weighted name. So I'm going to take this thing off. You know what? I'll leave that on. I'm going to put this back on the 50 day, but I'm going to change the what we're going to look at, and I'm going to go all the way down to the bottom. I have this saved, which is the what I'm calling the Mag 9, call it whatever you want, but your Apple, Microsoft, Amazon's, and Google's, and Meta's, the Netflix, the Tesla, and Nvidia, all kind of combined. You can see they have been leading the market, and the problem is we've had this major divergence, right? Yes, we've ebbed and flow in here where you can see that the amount of stocks over the 50-day on the purple line continues to go, but we've had this massive divergence now where we've dropped off significantly right through here. And you can see that we've continued to climb in terms of the amount of stocks. The big weighted names are continuing to run. So what I don't like about the big weighted names right in here, let me just remove some of this other stuff, is the failure to make the higher highs. So let me just put this back on like an IV, and I'll just draw this out for you real quick, because this is getting a little bit concerning that we failed to make the higher high and now making another low here, rolling over in this group. So I would definitely be concerned with taking out a low in here in terms of that. How does that correlate with the broader market? Well, I think what you're going to want to look at is those particular lows in the specific ETFs that you're looking at. So something like a swing low in here, right? You're definitely going to be watching. You know, I'd probably even start to get a little more aggressive if we start, you know, Monday, Tuesday, if we can't rally where we're getting new money coming into the market and the market starts to sell off. I'd be probably a little bit concerned that we're taking out, whether it be today's low or the low from 1223, you know, any of these significantly here. 50-day, if it can't hold the 50-day and we close down below this level, I'd, you know, really start to get aggressive with taking some props off the table, because this basically then says, okay, new year, game over, right? We're going to start to sell here a little aggressively and really do our rebalance. So I think we could see a significant pullback, you know, at least something down to like the 100-day, maybe come down and retest this area, right? Where you get something back down to maybe the 500, right? 495 area would be very, very interesting. SPY, right? I mean, it's been, again, like we just said, it's been on fire, but again, failure to make higher highs here. Can we get the 1-2 punch to get it back above here on Monday, Tuesday? Of course, right? But new year, is there going to be new highs and they continue to push it? I hope so. But again, this was ugly today. Probably a little bit just normal market selling in terms of the 27th and locking in some of the profits and losses in terms of the broader market, knowing they have to do that to clear by the end of the year. So that has to be done. That's why that basically happened today. So I'm looking Monday and Tuesday a little bit more aggressively to the upside, and even a little bit more positive. New money coming in terms of the SPY, and see where they can start to push this, or if they're going to start to come in to sell. If they start to sell, I'm just going to be ready, right? You basically say, This was ugly, taking out the 50-day. Obviously, last week was ugly. They managed to recover it by Friday. So I'd probably be looking aggressively on this one. Maybe something like the lows on that day. We put something like a flat line. You can see it across the board why that's interesting, right? You can see that basically resisted here, tested here, tested here, tested here. We had a gap down that said, nope, we can't fail here. And they rallied it back up. So anything that starts to break that area and close down below there, that's going to give you a pretty clear sign that things are starting to look ugly. Diamonds had a pretty good run here. And you can see with those industrials, with home builders, with all the materials, all those that basically are making up the industrials in here, it got absolutely lit up, and they're having that same type of consolidation. So similar to what we're seeing there, I'd probably be looking at the low, similar to what we saw in the spiders, somewhere around that area. It doesn't have that same support and resistance over here, but if it were to break down below, there is a red line in there, which is the 100-day. So we start to take out the 100-day and close down below there, then I would definitely be a little bit concerned because we have not done that yet. We did test that on last Friday, but managed to really have a good close above. So anything that breaks down below the 100-day on that one would look very ugly. And then on your IWM, we've already broken the 100. They were doing everything they can to get that back up today, and they could not retake it. So for this one, I'm probably going to be looking at that, call it 219.66 level or the swing low from last Friday where everything was ugly gapping down, but they managed to recover it. That low there is 218.07. Then this could really start to get ugly, taking out all the support on that line, that 217.62, probably coming down. You do have some small gaps to fill, but the 200 here on that could be a pretty good target on that one for trying to get a little bounce. So again, looking at your broader market, the other thing I think you have to keep in mind is what's going on in Bitcoin, right? So they're not able to keep this above the 100-day. I'm sorry, keep it above the 100,000 marker. Right, we've been hovering here, trying to get back up above that. We broke out for a little bit, and a lot of those names have gotten beaten down, especially today, right? So you look at something like a MicroStrategies sitting right on its 50-day. You look at something like a coin, and that is sitting right down below its 50-day as well. You look at something like a hood, and that is doing a lot better than the other two. Gave back a little bit on something like that, but even like a Riot and a Mara, right? They are struggling here, right? Down back towards this area with a big gap down below it. So this gap up was the same one that happened in the financials that was on election, who was winning, a new administration coming in with a more favorable crypto environment. So everything had that gap up, and now we're kind of threatening that gap. So I would definitely be watching your all your different stocks. You're even seeing this one come back down and fill the gap here, right? You have another gap down below that. They did have earnings that basically was pretty ugly, rallied it up, and now they're selling it back off, taking out all the moving averages. So this is definitely one where, again, I'd be watching everything in that space. So we talked about crude really not doing much. We talked about the yields basically have been relatively strong today, and volatility. Volatility is the last thing I want to discuss because I think going into January, again, if there's any kind of problems in January, we've been talking about being long some volatility in here, or at least long some protection, right? In some way, whether you're buying longer term puts or you're buying some type of put spread. That could be a put butterfly, that could be a put condor, that could be some type of um, drawing a blank. Oh my gosh, a collar, right? In terms of basically protecting your specific positions. And that's basically what a collar is selling a call and buying a put in the same expiration. Try to offset those. That helps protect your portfolio a little bit. So, but coming back to the VIX, they absolutely jammed it up when Powell started to talk last week, and the market broke down. So that really was had people excited in terms of what was going on there, but they managed to sell it off very, very quickly. And I think the last time we had any kind of like a big move in here, they managed to sell it off very, very quickly. This was the August 5th when they had the carry trade, and that was the nervousness. So this here, if we get anything like this in January, then I think this could get a little bit bigger, right? We could get a little bit more new year, new market, kind of new administration. So I think in January, maybe even in February. So you may want to be owning the Febs or the Marches if you're looking for owning implied volatility, whether it's through the VIX or a VIX product. I recommend, again, I'm not really a big fan of the leveraged ETFs or any of those. So I tend to play the VIX, but please understand it is on a future. So the futures are a little bit different. So you have to understand that product. If you do need help or have questions on to come into any of our forums and ask, we'll try to help you out as fast as we can on those. So I think on that note, I'll end with the VIX there, and I wish you guys a great. Well, I'm trying to get this done on Friday, get it out for you guys for the weekend so you can watch it. So I hope you guys have a great weekend, and we'll talk to you guys on Monday in class. Monday and Tuesday are full days, both days, not a half day like last week. Wednesday is the holiday for the new year, and then we have 2 more days, Thursday and Friday, where again I think we'll see a little bullish push from. It really depends on how Monday and Tuesday go, but a little bullish push with new money coming into the market, new year. So good luck, and I hope you guys have a fantastic weekend, and we'll talk to you guys soon.